In our balance of payments section, today in video number 25, we are going to learn about the autonomous and the accommodating transactions. The autonomous transactions are those transactions which are called above the line items. They are generally undertaken for some economic motives like profit maximization. These cause imbalances in the balance of payment, that is a deficit or a surplus in the balance of payment. A deficit occurs when the foreign exchange receipts are less than foreign exchange payments, and a surplus occurs in the balance of payments if the autonomous foreign exchange receipts are greater than the foreign exchange payments. So, autonomous transactions are international economic transactions made due to some reason. These transactions are independent of the state of country's balance of payments. Now, the autonomous transactions include the current account balance and the capital account balance. Now, in our previous videos, we learned what is current account balance. Current account balance includes the trade balance, that is goods, and net invisibles, that is the services, and transfer payments. So, all the components are export of goods and import of goods, which cause the net exports, that is shown in the trade balance. Net invisible, that is services, non-factor services, their incomes, that is factor incomes, and transfer payments. All of them put together gives us the current account balance. The capital account balance, on the other hand, includes foreign investments, that is the net value. Net value means the difference between the receipts and the payments. So, foreign investments like the FDI, foreign direct investment, the portfolio investments, and other direct capital flows. Then the external borrowings, the external commercial borrowings and the short-term debt. And finally, the external assistance. The external assistance. And the other one is errors and omissions. Errors or omissions includes all the items which could not be recorded in the current account and the capital account. So that is the autonomous transactions. The autonomous transactions, otherwise called the above the line items. That means these are the items that are actually shown in the calculation of the balance of payments. The next is the accommodating transactions. These are called as below the line items because they are to cover the balance of payment, deficit or surplus that is caused due to the autonomous transactions. Now, these are determined by the gap in the balance of payments, whether there is a deficit or surplus in the balance of payment. Now, these accommodating transactions are influenced by the state of country's balance of payment, whereas the autonomous transactions were not influenced by the country's balance of payment. Now, they are undertaken to cover the deficit or surplus in the balance of payments, and hence they restore the balance in the balance of payments. The accommodating transactions restore balance in balance of payment. If there is any deficit or surplus, that is covered by the accommodating transactions. That is why they are called as below the line items. These are generally not reflected in the balance of payment. That means the statement of balance of payments. Now, the transactions that are carried on by monetary authorities causes a change in the official reserves. So, the official reserve sale or official reserve transactions are used to finance balance of payment deficit or utilize balance of payment surplus. The official reserves transaction are used to finance the deficit, the balance of payment deficit, or utilize balance of payment surplus. The official reserves account has all the reserves of foreign exchange with the RBI. A positive overall balance implies an increase in the official reserves, and a negative overall balance implies a decrease in official reserves. So the country can use its reserves to balance its deficit, and RBI can sell the foreign exchange when there is a deficit. That means the central bank may finance a deficit by reducing reserves of foreign currency. So this will be shown as decrease in official reserves of foreign currency. The central bank may use surplus of balance of payments to purchase foreign securities, foreign currency or gold, which may result in increase in the reserves of the nation. To understand it better, let us say there is a deficit in the balance of payment, a balance of payment deficit, which is equal to, let us say, 50 crores of rupees. Then the official reserves will show a decrease in the official reserves equal to 50 crores. If this is 50 crores, if it is a deficit, then it will be shown as negative. So minus 50 crore, then in the official reserves we will find a decrease of 50 crore. So that is how it is balanced. So whatever is the deficit, that is compensated by the official reserves account. Now we learned that the autonomous transactions will include the current account and the capital account. When the current account balance plus capital account balance is equal to 0, then we say that the balance of payment is balanced. The current account balance plus capital account balance should be equal to 0. Balance of payment will be in surplus when current account balance plus capital account balance is equal to a positive number. Balance of payment will be in deficit when the current account balance plus capital account balance is a negative number. So this is what we may need to understand. The first statement, that the sum is giving us 0. That means if current account balance is a positive number, capital account balance should be a negative number. Only then you get a 0. So that's how you understand this. Then the type of questions that are generally asked from this accommodating and autonomous transactions are: what will be the effect of the following on balance of payment of India? The first one being Make in India program. Make in India program will increase supply, that is inflow of foreign exchange in India, causing an improvement in the balance of payments position. The next is import of pulses. The import of pulses will lead to outflow of foreign exchange. Since it's an import, we need to pay. So it's an outflow of foreign exchange from the country, which causes an adverse effect on the balance of payment position. Then the third one is slump or rise in oil price. A fall in oil prices means that India will be able to save foreign exchange even when the quantum of import is not reduced. So the current account deficit will be managed. This will help in improving India's current account deficit. Now a balance of payment account always balances itself. The balance of payment account always balances itself. It's a true statement. But it is only in the accounting sense that balance of payment always balances. It is the movement of official reserves or below the line items that imparts balance to the balance of payments account. Just now we saw when there is a deficit of 50 crore, then the official reserves reduce by 50 crore. Then another important question is differentiate between autonomous and accommodating items. So what we have learned just now is that the autonomous items are considered for profit maximization, but accommodating items are free from profit maximization. Then the second point is autonomous items, they cause a surplus or deficit in the balance of payment, whereas accommodating items restore the balance of payment. Balance. Then autonomous items may involve movement of goods across the borders like export and import, whereas accommodating items do not involve the movement of goods. They involve only the movement of official reserves with the RBI. And the last one is that autonomous items are called above the line items and accommodating items are classified as below the line items of the balance of payments. So with this we come to the end of balance of payments chapter.